Google just dropped its fourth quarter earnings this week, and while the numbers look solid, the stock actually dropped in after hours trading. Today, we're breaking down Alphabet's fourth quarter results, what's driving growth across the different business segments, and why the stock dropped despite the strong performance. Let's dive right in. First, let's go over the numbers. Alphabet reported revenue of $113.8 billion for the fourth quarter of 2025, which was actually up 18% year over year. So a really good result that actually beat analyst expectations of $111 billion. Additionally, for the full year, Alphabet crossed $400 billion in revenue for the first time ever, coming in at just over $402.8 billion. And on the bottom line, the story was even better. Earnings per share came in at $2.82, which was up 31% from last year, and net income also grew by 30%. And while these numbers would normally be the kinds of numbers that would send a stock up, Google's stock actually declined. So why was this? We'll get to that in a bit, but first, let's break down the business segments. All right, let's start with Google Services. So that includes Search, YouTube, Android, and subscriptions. It generated $95.9 billion in revenue, which was up 14%, so solid numbers there. Focusing in on Search in particular, it grew by 17% to $63.1 billion, which was significantly outpacing expectations. And I've touched on this now, I think, a few times in a couple of my videos, and this goes directly to the fears around ChatGPT and other LLMs killing the search function. And it's just simply not translated into reality. In fact, Google is saying that AI is actually helping complement the search function. Things like the AI overview and using Gemini to find things that you're looking for on the internet that you might want to buy or whatever. So it's helping people find the things that they need a bit easier. And Sundar Pichai actually called it an expansionary moment. And as I flagged in the earnings preview earlier this week, the Gemini app now has over 750 million monthly active users, and they're saying they're seeing no cannibalization from the Gemini usage in the core search function. Instead, it's expanding that pie. So that's really good news. But moving on to YouTube. It had a solid but not spectacular quarter, but there is a caveat which I'll touch on in a moment. But first, I'll just note that ad revenue grew by 9% to $11.4 billion, which slightly missed expectations. And this is where the caveat comes in, because the reason they missed expectations was due to the 2024 US election, because there's so much more ad spend during that time from all the different political parties and interest groups. So naturally, across that year, revenue came down a little bit. So it's a bit of an outlier. So it's a bit of a throwaway quarter, for lack of a better words. However, YouTube's total revenue across ads and subscriptions exceeded $60 billion for the full year to 2025. So really, really solid numbers still for YouTube, given that caveat. Google One and YouTube Premium also grew by 17%. In fact, YouTube now has over 325 million paid subscriptions across consumer services. So a bit mind-boggling there, and just really good to see that they're driving up this Google One and the YouTube Premium sort of experience. Okay, so moving on to cloud, which was definitely the highlight of the entire earnings call. In my video earlier this week, I flagged that cloud could probably grow above 30%, but I flagged that it could be even higher than that just due to the backlogs that they had at the time. I'm glad to say that I was right, and Google Cloud has absolutely exploded this quarter. In fact, it grew by 48% to $17.7 billion. So absolutely crushing it. Operating income more than doubled to $5.3 billion, giving the segment an operating margin of over 30%. And a large part of this growth can be attributed to enterprise AI adoption, which Pichai highlighted. He said that Google's models like Gemini are now processing over 10 billion tokens per minute via direct API used by customers. Additionally, they're seeing Vertex AI having massive adoption. And as we know, the launch of Gemini 3 was a major milestone for the company, and it sort of allayed any fears that Google was lagging behind companies like ChatGPT and others. So customers are increasingly choosing Google Cloud as well as for both AI infrastructure and their AI solutions. The company is also signing large enterprise deals and seeing strong demand for their 6th generation TPU. So that was a really big news last year as well, really competing with some of the other different companies like Amazon and Nvidia there. And this cloud performance is arguably the most important development in the earnings report because it really validates that Google's AI strategy at the enterprise level is really strong. So very happy to see these numbers as an investor. Despite the stock dropping, I think this is overall really good news for Google Cloud. Just quickly touch on the moonshots because I know these everyone loves to talk about the companies like Waymo. But yeah, so Waymo, Verily, and the other moonshots, these all generated about $370 million in revenue, which was down from $400 million a year ago. However, operating losses widened to $3.6 billion from $1.2 billion. But there is a specific reason for that. Because in February 2026, Waymo announced a $16 billion investment round, which Alphabet was the majority funder of. So this led to a $2.1 billion employee compensation charge in the fourth quarter based on the estimated stock valuation. So if you strip that away, the segment's losses would have actually probably been in line with some of the prior quarters. And now moving on to the number that kind of shocked me, capital expenditure. And honestly, it shouldn't have shocked me because we've seen this from now basically all the tech companies except Apple. So for the full year to 2025, CapEx to reach $91.4 billion, and the guidance for 2026 is that it'll be around $180 billion at the midpoint, and it could go up to $185 billion. So yeah, that's a roughly 100%, a double from where they are this year is where they'll be next year. And this is essentially the largest corporate infrastructure investment probably in history up until the next day when Amazon released their earnings and guided for $200 billion of capital expenditure. So Alphabet's CFO, Anat Ashkenazi, said the money would be used for AI computing infrastructure and to develop their frontier AI models to meet that customer demand. So that's the important thing there. It's not necessarily been thrown down the drain or thrown away. It's there to meet customer demand. But there definitely are some concerns that we should keep an eye on this one. So Alphabet generated $52.4 billion in operating cash flow in the fourth quarter, which is a record for the company. However, free cash flow was just $24.6 billion after CapEx. So for the full year, free cash flow was essentially flat. So as value investors, we always like to see free cash flow increasing, so not great there, but they're obviously trying to meet the massive amount of demand that they're getting from their customers, so completely understandable. And this is an interesting one, and I know a lot of Michael Burry fans will probably like this one, because Alphabet actually warns that the growth rate of depreciation would be meaningful in 2026, so it would meaningfully increase is what the CFO said. In fact, she said we expect the growth rate in 2026 depreciation to accelerate in Q1 and meaningfully increase for the full year, putting continued pressure on income statement. And in this respect, Burry is somewhat vindicated. Alphabet currently depreciates its servers over a 6-year period. However, given how fast AI is evolving, and this is where we come to the market reaction, because the market really didn't initially like the capital expenditure numbers and the depreciation numbers. And if you were listening to it live like I was, you could really see where the fluctuation was occurring. And it was really during the discussion about CapEx and depreciation, which obviously concerned some investors. And somewhat rightly, I'm not going to discount that. But what I would say is that I think across the board, across all the different business segments, there are a lot of positives to take away from this. So let's jump into that now. Okay, so just a few takeaways from the earnings call. First, what I would say is that they've delivered across the board. So they've beat on revenue, they've beat on earnings, search is accelerating, and cloud is growing it's bananas. So really good stuff across the board there. And I think given this result, this is the next takeaway. Given this result, I think we can say that Google Cloud is officially a success story. It has taken a little bit of time to get there, but like all things Google does, it eventually gets there. So, 48% growth. It's really, really good. 17.7 billion in quarterly revenue, 30+% margins. And it's really becoming a cornerstone of the Alphabet story and the growth strategy. So, yeah, I think if there's any Amazon investors out there, you'll have probably noticed that their cloud business, its growth is starting to decelerate a little bit. It's still really good, but it's starting to grow a little bit slower. So I think looking forward to 2026, we can look at cloud for Google and say, can they take a bigger chunk of the pie from AWS and Azure? So I think that'll be a really interesting talking point as we proceed through 2026. Third, AI cannibalization. I think that narrative is officially dead. Search is growing by 17%, so really good numbers there. Gemini hit 750 million users, and management sees this as an expansionary moment for the segment. So no concerns there. And then finally, CapEx. It is very large. $180 billion is a very large number. There's no discounting that, and we should obviously be concerned about that. And it's something that we'll continue to watch over the year. However, these numbers are backed up by solid demand. So I am still fairly happy with that. So as an investor in Alphabet, I'd say color me impressed. I think this was a great earnings report, and I'm at this stage very excited for the rest of 2026. But what do you think? Is $180 billion in AI spend justified, or is Google overextending? I really want to hear from you. Drop your thoughts in the comments below. If you think this breakdown was useful, I really appreciate it if you could hit the like button, subscribe for more videos like this. But as always, thank you guys for watching. This has been a good one. Thank you.